Bismillahirrahmanirrahim. Assalamu alaikum. Welcome to Mastering Accounting Skills. In our previous session, we have discussed all the steps involved in month-end closing. Now in this video, we are going to discuss year-end closing of accounts. Year-end closing is actually a mechanism to update the retained earnings account ledger to equal the end of period balance. At the end of the fiscal year, closing entries are used to shift the entire balance in every temporary account into retained earnings, which is a permanent account. So now we will go through the steps involved in this process. At step 1, as we have discussed already some steps in the month-end closing, so in the month-end closing from step 1 to 5, we need to repeat this in the year-end closing process also. So we will discuss it again. On the first, you need to make sure that all of your data entry is complete, and then you need to verify the accuracy of your data also. At second step, you need to reconcile your cash account, your bank account, your notes receivable, that is post-dated checks from the customers, your notes payables, that is post-dated checks issued to the suppliers, then inventory reconciliation, AR reconciliation and AP reconciliation. Then you need to amortize all of your prepaid expenses. At 4th, record all accrued expenses. At 5, depreciate fixed assets. These are the steps what we have discussed in month-end closing also. After that, you need to go review and update provision for bad debts. You need to review, you need to discuss with your manager, your collection team, your sales team, that which accounts receivable are not collectible, are doubtful. So you need to go and create provision from your profit. So to create the provision, you need to pass journal entry, bad debts expense. This as an instance, we took this amount 5,295. So you need to pass the entry bad debts expense with 5,295, and provision for bad debts you will give credit 5,295. So this provision for bad debts in the balance sheet, it will be deducted from your accounts receivable balance, and also this bad debts expense, it is a income statement account, so it will go to profit and loss statement. Then the second general entry which we passed, that if you review that there are some bad debts what we have written off in the previous year closing, so from that provision we have collected some amount. So if in that case you need to pass this, you will reverse the entry. So what you will do, provision for bad debts you will make it debit, and bad debts expense you will give credit in the narration to reverse the provision for collection from bad debts. And you will also mention the name of the customer in detail, that from which customer you collected this amount. After that, step 3, you need to go and generate the year-to-date trial balance, and then at step 4 you will go and prepare profit and loss statement and balance sheet. After doing all this, now you are going to close your year, so you need to pass the closing entries. So what you need to do, close all income GL accounts to income summary account. All the income GL you have in your account, sales, other gains or other revenue or like this, whatever it is, so you need to close that account. So what entry you will pass? You will pass sales account, you will make it debit. Sales has a credit balance, so all the balance you will shift to the debit and make that account 0, and you will give credit to income summary account with the same amount. Then after that you will go and close all expenses GL accounts to income summary account. Suppose we have these accounts in our trial balance with the balances, purchase account, salaries, overtime. So whatever the balance is reflecting on the year end closing in the trial balance, you will go and give credit to all the expenses, and the total of all expenses you will give debit to income summary account. After that, you need to close the opening stock in income summary account. This closing, there are two types of inventory system. One is periodic inventory system and the other is perpetual inventory system. So this entry what I am going to discuss with you, it is under periodic inventory system. In this system, you will update the inventory in your trial balance at the end of the year. Okay, so the opening stock what you took in the starting of this of the last year as opening stock, you will go and give credit to the same amount. So opening stock, you will give credit with this amount 105,953, and income summary account you will give debit. After that, you will go and transfer the closing stock to income summary account. Now we are going to start new year, and for the new year we have a new opening stock balance. So that opening stock we will shift to our opening stock ledger in the trial balance. So what we will do, opening stock we will give debit with the closing stock amount, and income summary we will give credit. And the narration, transferring closing stock year 2021 to the income summary account. Okay, so this balance, actually stock balance, will be your opening for the next year. At step 9, income summary ledger balance will reflect now the profit or loss for the year ending. After making all the previous journal entries, it will show you the profit for the year. There will be some balance reflecting in the income summary GL. So what you will do, you will transfer that balance to the retained earnings account. Suppose if we have a profit, then we will pass income summary account, we will make it debit, and retained earnings we will give credit. So like this, your income summary account, it will be zero. There will be no balance, and all the profit what we have earned during the previous year, it will go to the retained earnings. In case you are not using the periodic inventory system, then all this inventory opening stock inventory for it will not come here. Then you need to do cost of sales account, you will give it credit, and income summary account you will give debit. And under keep it in your mind that under perpetual inventory system there is no purchase account in the trial balance. Instead of purchase account, there will be cost of sales account. And also, if you are using perpetual inventory system, your inventory will be updated on the same time. Whenever you are making any purchase or sales entry, so your inventory will be increase or decrease respectively. Okay, when you have finished all of this, at final step, now you go and prepare the adjusted trial balance and match it with the ERP year-to-date trial balance. Make sure that in the adjusted trial balance, all income and expenses ledgers are with zero balance, as all of them are already closed to the year-to-date income summary account, and the balance is transferred to your retained earnings. I hope the knowledge we have discussed in this video will add value to your professional skills. Subscribe my channel to learn more cool accounting skills. Don't forget to click on the bell icon, like and share it with your friends who are already working in the accounting profession. Thank you.